Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you today. Matt Pines, executive director of the Bitcoin Policy Institute, is our guest. We're going to talk with Matt at length about the strategic Bitcoin reserve, U.S. government policy as it relates to Bitcoin, and the geopolitics of countries and sovereign wealth funds acquiring Bitcoin, what that means for Bitcoin, but also the world international trade. We're going to talk with Matt a bit about quantum and the threat to Bitcoin, cryptography, and the world in general. It's very interesting. We'll also check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk about markets. And before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. The conversation with Pines coming up after we talk with Beimnet is very interesting. Matt is a national security expert. He's just taken over the role of executive director at the Bitcoin Policy Institute, which is a think tank in D.C. that focuses on bringing Bitcoin markets and infrastructure and players into contact with policymakers. I gave a speech last year at the Bitcoin Policy Summit at the National Press Club about Bitcoin and American values, which we ran on this pod. So if you look back in about April 24 on the feed, you'll find that. And they're hosting another Bitcoin Policy Summit in June in D.C. Check that out at btcpolicysummit.org. Let's hop right into it with Beimnet. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thank you for having me.
One of the best runs in stocks over a 6-day period, maybe in history. Bitcoin just still in the 95 range. What's going on in your mind? And there was data.
Yeah, no, equities have had a pretty tremendous run. And
over the last week.
Over the last week, past 2 weeks, really. And it's largely been a function of, short covering, some headlines around, more optimistic scenarios for trade deals getting done, particularly with Asian counterparties, India, South Korea, Japan, maybe Vietnam. So there's a lot more optimism about, a deal getting done. But in terms of, the hard data that we've seen, it hasn't really been good. Not that ADP is like that relevant, but, ADP, showed a slowdown in the U.S. labor market. I think it printed around 70,000 jobs gained versus estimates of like north of 160. So that was a pretty big miss. You also have, things like oil, trading really poorly and declining through $60 a barrel on WTI crude. Typically that's a barometer for growth. You had, Chinese PMIs come in really soft overnight, and things like copper have come down. Generally, you've seen corporations guide pretty poorly for future quarters, a ton of which have removed guidance altogether. And so, the corporate earnings so far have been, I would say, less than stellar. But the market doesn't really want to sell stocks right now. And, there's some month-end flows, some CTA buying potentially. Vol has come off a little bit. So there's some technical things in stocks that are causing them to rebound. But high level, I do think they are mispriced. The S&P is down 7.5% year to date, and we upended decades of global trade order in the past 100 days.
With a lot of remaining uncertainty there.
With a ton of remaining uncertainty, and corporate America is flashing yellow and, spewing out warnings and stuff, and yet
retracting guidance and things, yeah.
And yet, we're still pretty elevated, especially in, some of the high-flying names that are definitely crowded, retail plays. But that's been a large part of this market. Retail in the U.S. has been trained to buy every dip for the past 17 years, right? Since the financial crisis, stocks have really only gone up and to the right. and every single U.S. equity investor has gotten paid to buy the dip. And in terms of flows data that we see from our various brokers, like retail has been buying. And so that's contributed to the strength in the market. But ultimately, I think the scenario that you have on a go forward over the next quarter or two is going to be filled with lots of bad stuff, to put it plainly, right? You are talking about shipping from China to the U.S. that's going to be down by a third.
I saw that graphic of them all anchored and not picking up cargo. Yeah.
Right. You were talking about tourism flatlining to the U.S., right? And that is what the aviation companies have been, or the airlines have been highlighting.
Is that because of the tariffs themselves, or is it because of like the reputational damage?
Anti-U.S. sentiment.
Yeah.
Right. And so, you're going to have a pretty big slowdown in U.S. tourism. You have 5 million student loan borrowers that have recently, technically defaulted.
Yep.
And yeah, it is a pretty concerning set of conditions. And now the question is, can equities look through all of that noise? I find that to be a very difficult question to answer, but I'm inclined to think that U.S. equities aren't really priced for a recession. And if you look at something like, predicted markets or Polymarket has, I think, the odds of a recession north of 65%.
Yeah.
Right. And historically, in recessions, earnings decline by a lot and equities decline by a lot. And I don't really think the stock market's priced for a recession, but
the likelihood is pretty decent.
And that's what the fixed income market is telling you, which I think is a more honest reading of the market, which, as we sit here, there's 100 basis points, essentially priced for the December 10th FOMC meeting, right? So between April 30th today and December 10th, you're talking about, 8 months or 7 months, and you're expected to cut 4 times by 25 basis points. That's a lot. Yeah. Especially when the hard data hasn't really turned. I think part of the optimism has to do with just the front running of tariffs that's happened, in terms of a lot of folks have pushed their activity forward to avoid some of the tariff stuff. But ultimately that will fade. Right, the policies that the administration has pursued, right, are pretty aggressive on the tariff front, right? They have removed the de minimis exception, right, and so they are actually charging tariffs on small stuff now, and people can't, they've also increased their number of customs agents and stuff, they're monitoring and
so they're fully preparing. It's not it's not all bluster. They're
no, they want tariff policy, and it's also if you think about the baseline level of tariffs, they're still pretty punitive, right? So if you're talking about at minimum 10% reciprocal tariffs and higher than that for most places, that's still pretty.
That's a lot.
Yeah, that is a pretty large price hike on the consumer when the consumer doesn't look that healthy to me.
Speaking of which, the Amazon thing where they're posting the
price hikes,
the price impact of tariffs on specific items, so you can see the reason it's this expensive is because of an additional $5 from tariffs or whatever. That was pretty interesting, striking. I know the White House pushed back on that.
I mean, it seemed like they were considering it, then they suddenly weren't. I don't know the exact details, but it is pretty clear to me that the U.S. consumer is going to have to pay more for cheap goods, and they're not really used to that.
Right.
Just anecdotally, Temu has pulled all of its Google advertising.
Yeah, they don't want to even try to get U.S. consumers at the moment.
Because
they're not closing the store.
Because the goods that they traffic in, mostly, the prices are going to go up.
Yeah.
And so it's right,
they don't have anything to advertise. Normally what they're advertising is, wow,
cheap
you
Chinese
Googled
goods.
this thing and it's, $100 there, but it's only $25 here.
Yeah.
I mean, I guess part of the calculus obviously is if they are passed through, which I know the administration wants to counter or, suggest that's not a fair way to think about it, but it's historically what happens. then Americans are either more apt or even encouraged, incentivized to buy American goods since the foreign ones are more expensive. Maybe that brings them in. But the net effect is that it's just more money out of Americans' pockets.
Yeah, because it takes years to get your supply chains domestic, right? And it takes a lot of time to hire.
We don't have the right workforce, especially for manufacturing, right? I mean, we've been telling our parents have been, and parents in general have been telling kids for decades to go to college.
Yeah.
So much so that they had 17 and 18-year-olds take out hundreds of thousands of dollars of debt to do it.
Yeah.
But if you want to be in the trades, which is what we need to build stuff, which by the way is great. Tradespeople make a lot of money. They make a lot of money. HVAC, yeah. But we just don't have that many of them.
We don't. And you know what the irony is? I remember going to college and attending my first computer science class, and the professor putting out there, like, what percent of jobs are going to be comp sci related in the future and highlighting that. And now it's like, in the next year to 18 months, like almost 90% plus of coding will be done by AI.
Yeah.
And so there's a whole generation of folks
that's a good point.
Gone to school to learn, programming skills that are effectively going to be obsolete. Like in theory, they probably are already obsolete.
Yeah, by ChatGPT and Gemini and Perplexity and all that stuff.
Correct.
Yeah.
And so, we're really going to have issues with repurposing our workforce.
It's not just the supply chain of materials that has to be redomesticated if this is long-term policy, but it's reorienting the entire labor market, which, we're talking now on the scale of people's lives. Like, that could take decades.
That could. But, I mean, the AI stuff is definitely the most fascinating thing in the market right now. I mean, they have these robots that do surgeries now at better rates than surgeons. Have you seen the one
where it's like doing origami and it's so
precise.
Fine? Oh, my gosh. It's like the tiniest little piece of paper it's doing it perfectly. And it's like it's one of these surgery robots.
So, surgery robot. I bet you...
Right. AI disintermediates high-paying jobs.
A ton of high-paying
jobs. Not just...
The AI is going to read X-rays and CAT scans and MRIs
I've seen
way better than humans.
I've already seen it.
The data set that they're trained on is millions of these scans.
Yeah.
Right? Like, it's not, some guy that's been doing it for 20 years. It's like 100,000 of him.
Yeah.
Right?
It's hard to compete with that.
And so, I really don't think that folks in the economy are really prepared for what AI means. Mm-hmm. And the pace of change is insane. And there's the tech that we know about in the public sphere, and then there's the tech that is the true leading edge frontier stuff that isn't available to the public yet, or even out there in public discourse.
Right.
And I bet you that stuff's even scarier.
Yeah, like for example, people talk about the O3 model in ChatGPT. It's really good with quantitative questions and puzzles and math and reasoning.
Yeah.
But then 4.0, the LLM model, is also really good. But what's 2-3 stages past it is you got to think it's fully under development.
No, absolutely.
And what is that? What can that do?
So DeepSeek just released a new math model, and it's 7 times better than the one they released a few months ago.
Yeah.
The
pace, man.
Right?
Wow.
It is insane,
Yeah.
And so it's just really hard for the human brain, I think, to handle that type of
well, we
stuff.
don't do well with log scale type of stuff, right?
Correct.
It's not really natural way of thinking.
Not intuitive.
Right.
But anyway, the labor market is concerning. And you have a non-farm payroll print on Friday that will kind of set the tone for stuff. I think if it's positive and it's good, it looks like we've got a good amount of jobs, I think people will look through it because what we care most is about the forward, right? And then on trade discussions, you have to realize, one, especially with China, there's so many other things to negotiate, right? Like intellectual property, right? The things like that are going to take time. And Besson said it might take 2 to 3 years to get a trade deal done. And don't forget, Japan's largest trade partner is China. Fucking South Korea is right off of China.
It's connected to it.
It's connected, right?
Yeah.
So these nations, right, they have to kind of straddle both worlds.
Yeah.
And it's not clean.
It's not easy.
It's not easy.
Right.
And so, when the administration continues to talk about, trade deals that are a couple weeks out, a week, like that seems a little disingenuous because these things take time.
Yeah.
Right. And the most meaningful ones are the ones that are going to take a ton more time. Right. The EU is one of the U.S.'s largest trading partners. China is and the EU's trade person the other day said, like, we're not close.
Yeah, we're not rushing. I saw them say that. And I saw China say that they haven't had conversations. We've said they've had some. We're at that stage. We're not even having the big meetings yet. With some of those big ones. Well,
and it's also hard to coordinate 17 different countries to meet with you and do trade deals that are nuanced and like have impacts to the tune of billions of dollars.
Yeah, so big bull market in trade representatives and customs officials. That's growing. Maybe we think about a second career if the crypto thing doesn't work out.
But lastly, crypto trade's fine.
Yeah,
I mean just Bitcoin mainly.
Yeah,
and I think. Ultimately, where we're headed is back to easy monetary policy in more ways than one.
Combined with a more fragmented geopolitical landscape. And I think we should we got to wrap now, but we should do on one of our next episodes a more fundamental and theoretical discussion about Bitcoin's role in a world like 2, 3, 5 years forward that's much more fragmented geopolitically, because I think it has a very interesting role to play there. And I think we haven't ever had that. I mean, it's been, a little bit post, but mostly Pax Americana the entire time Bitcoin has existed. So, and that seems like it's ending. Not that America is going to do badly, but that it's no longer going to be the sole top dog able to dictate terms and put the dollar wherever it wants. And so it'll be interesting to see how Bitcoin plays in that environment.
100%. Would love to do it.
Beimnet Abebe from Galaxy Trading, my friend, as always, thank you so much.
Thanks for having me.
Let's go now to our guest, Matt Pines, Executive Director of the Bitcoin Policy Institute and author of the great novel Expectation Value. Matt, welcome to Galaxy Brains.
Thanks for having me.
I've wanted to have you on for a long time, Matt. I've been following your content for years on Bitcoin, on national security, on UAPs, on other interesting issues. But you did just relatively recently join the Bitcoin Policy Institute as Executive Director. Tell us about that, like who you are and what BPI does.
Yeah, I had a non-traditional career, undergrad physics and philosophy, master's in public policy. After some time in the National Science Foundation, I stumbled into national security consulting, essentially helping the government think through like low probability, high consequence scenarios. So those are both kind of like exercises, like doing simulations and kind of full scale run throughs of like worst case scenario planning, as well as like assessments of how prepared is the U.S. government for all sorts of bad scenarios, cyber attacks, nuclear war, pandemics, earthquakes, et cetera. And so that involved assessments of emerging technology, kind of horizon scanning. And then I was interested in Bitcoin, but it was kind of always like a side interest of mine. I moved from kind of doing government consulting to private sector consulting a few years ago, where I was director of intelligence for a geopolitical and cybersecurity consultancy, kind of advising multinational, boards, C-suites on China trying to hack them, overall geopolitical risk, and, the changing, structures of power and globalization. Around 2020, I started thinking about Bitcoin more publicly and sort of writing tweet threads about Bitcoin and national security, kind of thinking about these what ifs from the perspective of, my background, like what if Bitcoin actually succeeds in the way that Bitcoiners think it would, right? Those questions were not being seriously asked or even approached inside the circles that I was familiar with inside the government. And that seemed like a strategic gap that needed to be filled. And so the folks, David Zell, Grant McCarty, that had this idea for a Bitcoin think tank, reached out to me pretty much before BPI was even like a blog, and asked if I would write the first white paper based off of some of my random Twitter threads. And so I did that, Bitcoin and U.S. national security, kind of an initial assessment. And that kind of launched me into kind of the Bitcoin space, I would say. And I've sort of been, ever increasingly getting pulled more and more into it, just intellectually, professionally, just everything about it, it tends to act as a gravitational pull. And so when the opportunity arose earlier this year to kind of jump in and help lead BPI full time, it was like a long time coming. BPI is this unique organization as a think tank dedicated to providing really high quality research and analysis and advocacy inside DC in particular to help inform our policymakers on Bitcoin specifically. And the moment that we're in is one in which Bitcoin is a subject of strategic significance. And we want to make sure policymakers are being advised and making decisions off the best possible information. And so the vibes are just immaculate, right? We're a small team, but we're growing inside DC. And I just like working with small teams. And so my company was acquired by a publicly traded cybersecurity company, and you know how that tends to go. So all the stars aligned, and it was just the right time, right place, and really couldn't be happier to kind of be at the helm with Grant and David to help steer BPI to its next era.
Well, it's a great organization. I know that we've been involved with. They threw a great summit, the Bitcoin Policy Summit, last year in April. In 2024, and there's another one coming up in June. What's the deal with the Bitcoin Policy Summit this year?
Yes, and so we are a think tank, and so one of the major things think tanks do is they put on like big events to kind of act as a crucible to bring senior policymakers, representatives from the industry, policy experts, technical experts, other folks that are curious about Bitcoin and where it's going to go, and what national policy is going to mean for Bitcoin. And so we're doing that think tank bit, except we're doing it bigger and better this year at the Ronald Reagan Building International Center in downtown DC on June 25th. You can go to btcpolicysummit.org to register. We are expecting a significant bump in attendance from last year, even though last year was a quite significant event. We're going to have multiple senators, congressmen, folks from the White House, folks, senior leadership positions, to really, articulate a vision now that we have at least rhetorically committed as a federal government that we're going to be pro Bitcoin. What does that really mean, right? We want to try to cash out in more concrete terms specific policy ideas and suggestions that can be actioned in the next, 3, 6, 12, 24 months by this administration. So we just want to have a bunch of, jibber jabber panels talking about issues. We want to have very, very concrete policy suggestions to bring things to the table that can move the Overton window and kind of align incentives and bring attention to bear by senior leadership. So get your tickets now before they fill up. Come to DC. There's going to be a day on the Hill the following day to sort of take the folks that are interested in Bitcoin and advocating for Bitcoin to their congressional offices to make their voices heard. So really excited for this event. We're sort of all systems go. We want to bring as many people to the table as possible and bring voices that have insight and perspective to shape the policy process.
Yeah, it's so urgent. It's the right time. It's all happening now. Let maybe dive into some of the policy ideas. I know I would say the biggest one probably for Bitcoiners is the Strategic Bitcoin Reserve, which you've been very active about talking about. You guys put out or wrote, I should say, I think David Bailey put it out, but you guys wrote a draft executive order, I recall, in the after the election at some point. The president has obviously signed the establishing the National Strategic Bitcoin Stockpile and the establishing the National Strategic Bitcoin Reserve and Digital Asset Stockpile executive order. I believe that's the name of it. It puts Bitcoin in hold and buy only mode for the government, and it puts altcoins in hold or sell only mode, which is quite interesting. What are your thoughts on what the government should do, and then any intel that you may have that you can share about where you think the government is on implementing this policy?
Yes, so there was a strategic shift in the U.S. government's historical position with respect to Bitcoin, both rhetorically by designating Bitcoin as a strategic asset with fixed supply, essentially naming it digital gold. So that was a critical piece of just a piece of paper with the president's signature on it that was a signal to the world of how the U.S. government thinks about Bitcoin, and then implemented on that rhetorical commitment to that understanding of Bitcoin as a strategic asset by establishing a strategic Bitcoin reserve, which consists of the current holdings of Bitcoin, which there's an audit underway to establish exactly how much Bitcoin U.S. government has its in possession that it has like clear legal title to. So I'm curious to see if and when they make that public. Could be soon if they decide to do that. If the audit is close to completion, but then also make budget neutral purchases of additional Bitcoin at no marginal increase to the taxpayer. And so instructions have gone out to the Commerce Department and the Treasury Department to identify those budget neutral means. And from statements from, for example, Bo Hines, it seems like they have put pen to paper and they have identified a number of different kind of creative ways of identifying budget neutral means, say asset swaps, existing sales of government assets to purchase additional Bitcoin. Those range from, I think, the somewhat more symbolic or trivial, like couch cushion money or selling off, maybe existing digital assets that they don't want to hold to buy Bitcoin, all the way to like pretty substantial, mechanisms, right? Taking portions of the tariff revenues and using it to buy Bitcoin, using funds existing there are surpluses in the Exchange Civilization Fund, privatizations, land sales, oil and gas sort of lease royalties, et cetera, all the way to potential gold revaluation. We have gold certificates that could be revalued mark to market. And so they span from like trivial, like tens to hundreds of millions of dollars, to like tens to hundreds of billions of dollars. And my understanding is they're going to be reviewing and assessing those options like in the next few weeks, and then making a determination. I have no inside alpha about how far they want to go, but their statements seem to be like they want as much as they can get. So that's where we are now. But I think that's the market's waiting to see, where on that spectrum are they going to land? Because that makes a huge amount of difference to how you would forecast buying pressure if that's your bag.
Yeah, it does. I think to me it's interesting. Like I think, yeah, obviously buying $10 million is very different than buying $10 billion. But I think honestly, any purchase by any method opens a pretty big door for the world on this, right? It shows that we're committed to doing something. Like starting small, I don't think is a sign that it doesn't go big one day. I think it can easily be a first step. I mean, I don't know if you've heard, I've been advocating for one of the more, couch cushion ideas that you mentioned, which is like take some of the sell only digital asset stockpile and use that to buy Bitcoin. Because that's like wholly under the control of the Treasury Department anyway. They don't need like a whole bunch of other, I mean, I'm sure there's a whole bunch of annoying legal issues they have to figure out, like related to civil asset forfeiture, like you said, for free and final title, right? Like I think figuring out which coins they actually could do that with is probably complicated. But do you think that like the floodgates open even with a small buy? Am I wrong to think that?
I think so. From two different vectors, right? One is just the domestic market signal. When your government starts to buy an asset, I think a lot of individuals that haven't, to this point, seriously considered buying Bitcoin might now perk up and tell their broker or their RIA, hey, get me in on that. Like I want at least whatever that BlackRock, candidate 5% allocation is. Like, so I think that would be, I think, a market signal. I think that would generate headlines. I think that would raise the salience of Bitcoin in the public consciousness. The second vector, I think, is geopolitical. I know that, national leadership in multiple countries, including, all the major Gulf countries, all the major Asian capitals, including China, are closely watching, the U.S. government's moves on Bitcoin. And they are closely studying the ins and outs of the policy process around the SBR and these different means of financing, because they're trying to suss out the same thing we're trying to suss out. Just how serious is the U.S. government on Bitcoin? Everything from just a rhetorical, patronizing pat on the head to a bunch of campaign donors to a strategic monetary reset, in motion that's like stealthily being disguised, right? And I think some Bitcoiners have different opinions on where we are in that spectrum, but I think a lot of other national leadership in other countries, like that's an intelligence assessment that they have to make to give to their leaders. It's like, what is it? And it's ambiguous at the moment, right? And in that ambiguity, they have to hedge for uncertainty about where exactly on that spectrum are these moves being calibrated. And so any sort of incremental update, right, from government official action would sort of shift that sort of Bayesian assessment. And governments, right, they have to hedge, and so those could be reflexive in various ways. So that's why I'm very closely paying attention to kind of the geopolitical dimensions and kind of the quote game theory associated with this.
Yeah, it does seem like nation states now should be, even in this period of ambiguity in the U.S. over what we will do to fund the SBR, they should maybe be taking Satoshi's advice, right? It might make sense to get some in case it catches on from a national standpoint. Like, because if I'm looking at this as a foreign country, that has to hedge dollar exposure, that has, is looking at a more multipolar world emerging, something like Bitcoin looks really useful in that spot. And then if the mere suggestion is, well, we're not exactly sure how or when they may buy, but you've got that piece of paper ordering them to figure the answer out. Like, if you're a foreign country that is in that position, wouldn't you be like, look, man, I'm not going to wait for, Scott Bessent to hit the Coinbase order book. Like, we should just start buying now. Like, have we seen that? I know we've seen some sovereign wealth funds. Abu Dhabi's bought a bunch of Bitcoin ETFs in Q1, and et cetera. But do you think there is nation state accumulation happening outside the U.S. already?
I mean, I was in Abu Dhabi in November, and my understanding from conversations is that, some nation states have been accumulating via mining, which in kind of their national bureaucracies is sort of separate from the monetary and sort of sort of fiscal functions, right? It's considered, okay, we're going to have state-owned mining, we're going to accumulate Bitcoin, but it's not necessarily considered a national reserve asset. It's just there, right? It's sort of not necessarily, it's on the collective balance sheet, but it's not considered the same way that we would consider, say, like a national reserve, right? But the fact that the SBR was signed is now moving those conversations up from being like, hey, let's just give permits and authority for state-owned enterprises and other enterprises to mine Bitcoin and accumulate Bitcoin, potentially on the national balance sheet, to the sort of fiscal and monetary authorities of those countries, the central bankers, the ministers of finance, that are now being forced and asked by their national leadership, their king, their president, their prime ministers, et cetera, hey, like, what if we have to actually, catch up? How much Bitcoin do we have? Does this require open market purchases? I think the sequence has basically been mining, sovereign wealth funds. The last domino would be, central banks and national governments through the ministers of finance, changing their reserve management policies. But I think we're sort of far away from that. But I think we are in the era of, accelerating state mining and accelerating sovereign wealth fund accumulation. I think it's very driven not just by like the endogenous story to Bitcoin and the signals being sent by the administration on Bitcoin, but also the external macro geopolitical environment, right? We're heading into a world where US and China are like in a basically declared total economic war. Like we're sort of forcing folks to try to pick sides. We're trying to this is leading to a fragmentation of the geoeconomic and monetary structure. And in that system, the folks that are being essentially coerced or induced to sign up for a monetary zone that's underwritten by a security zone that might be more tightly constricted are facing hard trade-offs, right? Essentially hard negotiation asks from the U.S. government saying we want you to do X, and that X is in principle going to be painful for those governments, and it could involve a number of different things, right? Like forced swaps or forced buys, reach around QE. All of which is basically to say that the legacy structure of the monetary system, the U.S. Treasury security as the global collateral, is being securitized, right? And so the folks that can avoid that, right, want to try to marginally balance their exposure to, I'd say, non inside money assets like gold and Bitcoin. Gold is the old standby. It's gone on this parabolic run in the last few months, taking a bit of a breathing, but that's kind of what you would expect. Like every $100 move in gold is like most of the market cap of Bitcoin, right? But, from my perspective, what I talk to policymakers is, okay, if we're heading to this scenario where we're, implicitly going to redemarcate the monetary zone and sort of force financial repression on folks, like you're making the Treasury security kind of in principle kind of a less desirable asset over the long term. And we have, 7 to 8% deficits kind of baked in. So not a great picture for like bondholders, right? Like inevitably, Luke Roman, everyone's like, inevitably someone takes it in the teeth here. We have to like force capital holders to take losses. And then everyone flees the harder assets. Gold and Bitcoin, and now now on the lips of these policymakers, it comes out of Dalio's mouth, as a pair. It comes out of now Secretary Bessent's mouth as a pair, right? As gold and Bitcoin as hard assets. And that psychology, once it's embedded, creates kind of reflexivity. And my point is, well, gold is a old standby asset, but to a certain extent, it's been hoarded by a lot of our authoritarian rivals in Eurasia. And if you look at the comparison to say the total supply owned by different countries, maybe we have 8 to 10% if you add up gold ETFs, government reserves, and individual holdings of above ground gold. If you do the same analysis for Bitcoin, I think it's plausible we have 30 to 40% of the available Bitcoin supply. And so we're just right there. We have like a 3 to 4 asymmetric leverage for these two hard assets monetized. But of course, if we're entering this era of hard assets monetizing, Bitcoin's likely to run much faster. And so if the U.S. government's kind of hedge itself in this world where these harder assets are going to monetize, and we don't want our rivals to get an advantage, Bitcoin provides that sort of asymmetric advantage for us.
Yeah, I think you're right. And we do own a lot more Bitcoin than gold, proportionate to the rest of the world. Is that, that's sort of one of the, I know Saylor has said this. He said, sell the past, buy the future. Cynthia Loomis's proposal revalues gold, right? The valuing of those gold certificates, by the way, is statutory, right? They're set by federal law at the $46 an ounce or whatever it is. So you need an act of Congress probably to change that, right?
I used to think that, although I've done some more research, and there might be some loopholes in that. So yes, the official statutory price of gold is set by law, the 1973 Par Value Modernization Act. And so there's existing gold certificates that are held by the Fed for the Treasury that value the existing gold reserves, at their 1973 value, can't be revalued without changing the statutory gold price. However, the Gold Reserve Act and those acts give the Treasury Secretary the authority to retire those gold certificates. So essentially, tell the Fed, essentially, cancel those, and then I'm going to, as a treasury, issue a new instrument, right? Say a gold reserve, collateral instrument that doesn't get publicly issued, just as a new instrument that the treasury has the authority to create. And then under section, I think it's 1313 or 13.3, the Federal Reserve Act, the Fed can accept that collateral, right? Accept that instrument as collateral, and then credit the Treasury General account or the gold reserve account, and then swap it to the Treasury General account with the market value of those instruments. So there might be loopholes where the Treasury Secretary
really sell the gold in that spot, right?
No, it's just an accounting maneuver. It's just essentially it's like internal gold QE, right? Where essentially you're just creating a new instrument, you're valuing an existing asset to its market value, and then you're crediting the Treasury General account with the market value reserves. And so that gives the Treasury Secretary, that amount of firepower. Could be $800 billion in the Treasury General account. Now he could decide to buy Bitcoin with it. That might be to actually have the authority to purchase Bitcoin. It's open to interpretation, right? The Gold Reserve Act says the Treasury Secretary has the authority to use the Exchange Stabilization Fund to for example, deal in gold, foreign currencies, and other instruments of credit and securities. Now, Bitcoin's not gold. It's not foreign currency by the definition, even though it's legal tender in certain places. So you'd have to structure the transaction in such a way that it's kind of like a overnight repo or something with Coinbase, where it's denominated in dollars, but it's sort of redeemed in Bitcoin. So I think nature finds a way. I think if they really wanted to, they could, without new law, buy Bitcoin. Now, do they have the political will? Do they have the exigent circumstances to drive them to sort of find all these different maneuvers? I don't know. Remains to be seen.
Yeah, it does. It's super interesting. You've got the I would say political White House cover to do it, but there's legal questions, and then there's broader, right? Because there's opportunity cost. I think when you're trying to collapse the fiscal deficit, which they've talked a lot about wanting to do, rightly, or fund other things, or you're laying off employees from the federal government, right? There's a political cost to using excess funds to buy Bitcoin rather than something else, at least in a world where, maybe 20% of the country likes Bitcoin, but the other 80 either hates it or doesn't know about it. Right. But yeah, I mean, it's a very interesting. I want to go to something else. You were talking about, debt and the demand for debt, which is our debt, which, as you can see, is, low, not low, but I mean, the 10-year is stubbornly high at like 4.5%, right? Despite, everything they're trying to do to lower it. And that has huge implications for the country's debt and debt service, obviously. You and Andrew Hones wrote a white paper about BitBonds, this concept. I got to shout out a little bit, Brian Estes from Off the Chain Capital, who's also been talking about this for a long time. What is that? What are BitBonds? Maybe just start there. I won't even preface it. Tell us what they are and how they fit in here.
Yeah, I mean, a BitBond can be structured in a variety of ways with different sort of, dials being tuned. But the basic concept is the government issuing a security that provides a stream of payments in Bitcoin. And so essentially you have a structure of any sort of bond where it's, your principal and then the interest payments. And so you're basically saying to the buyer of the bond, there's going to be a certain amount of that interest that's going to be paid to you in Bitcoin. Right. And so based on your risk tolerance, based off of how you view the future value appreciation of Bitcoin, you'll get a revenue stream of Bitcoin. And then in the current version that we propose, portions of that Bitcoin bond proceed upon issuance are used to purchase Bitcoin for the government's strategic Bitcoin reserve. So it's kind of like the buyer of the bond gets a certain Bitcoin revenue stream, and the seller of the bond, in this case the government, gets a certain amount of Bitcoin as a result of issuing the bond. That's the basic idea, right?
Yeah. So you're issuing new debt, like a treasury, and it is the idea that it's partially a treasury, like it also pays out principal and interest some amount in fiat, but it's like any treasury note, but there's a portion that pays out. So then the government goes and buys Bitcoin in order to fund that portion of the interest payment to the bondholder that is in Bitcoin.
Yes. So you can imagine a scenario where, say, the government issues a 10-year note, right, where they have, say it's just like $100 that they're trying to borrow money for, right? They still, say take $10 of that, and they'll buy Bitcoin with it. And then they'll take $5 of that $10 of Bitcoin that they just bought immediately upon issuance, and they'll put that $5 in the strategic Bitcoin reserve, and the other $5 will be put into essentially an escrow account that pays out the interest payments over the whatever the duration of the bond is, say 10 years, right? So you'll get a fixed amount of Bitcoin, just like you would get on a any other debt instrument paid out to you over the lifetime of the bond. And then the way we structure it is, one, like the interest payment would be much lower, right? So the premise of this is that because there's a lot of interest for security products that provide essentially an exposure to Bitcoin without all the volatility associated with direct Bitcoin exposure, essentially the MicroStrategy play, where you kind of you dial down essentially how much vol is in a particular instrument, and so you could do the same thing here. But I think because it's a government bond, you would kind of structure it in such a way that you think, it's going to be relatively low vol. So the percentage of the total amount of the bond that's Bitcoin exposed would be relatively low. In this case, say 10%. And then if you get product market fit, maybe it attracts more demand than regular bonds. And so maybe you can issue it at a lower interest rate, say 1%, annual sort of fiat interest rate, right? We structure it in such a way that there's like a cap on, essentially you get 100% of the BTC upside up to 4.5% of the total compounded return, and then 50% of the remaining Bitcoin upside. So this was Andrew Hones' innovation, and he's like an expert on kind of structure these financial products in such a way that, you would kind of, as a buyer of the bond, you're kind of guaranteed what would otherwise be like a normal, say 10%, like a normal 10-year yield, right? So you're a little bit capped on your risk, but you also have a bit capped on your upside, right? And then the government, similarly, right, gets 50% of that total issuance, so that total sort of initial Bitcoin purchase allocation into the SBR. And so it gets the national balance sheet exposure to that same Bitcoin upside. So in principle, right, the sort of the win-win-win dynamic here is the government can issue debt at a lower market interest rate. And so it doesn't have to pay the, 4.5, maybe even 5% interest that it has when it has to refinance all this debt that it's been issued, for the last few years post-COVID. So it has, can issue at a lower cost. It can, fund acquisition to the SBR, and then folks in the market can acquire Bitcoin exposure with kind of the full freight and credit of the United States underlying the bond, and they can see that it's essentially fully reserved, right? Now, why wouldn't people just be able to create kind of a synthetic version of this, right? By just buying Bitcoin and buying government bond? Well, one key feature of this is like tax advantaged, right? Is that a lot of bonds, are tax advantaged. If you purchase government bonds or even, municipal bonds, they're tax advantaged. And so that's like a key feature that the U.S. government as a policy, move would put in place to say, okay, buyers of this bond, like other sorts of bonds, basically can defer, capital gains and get other sort of tax advantages, right? So this would be a way of kind of engineering, extra demand for the instrument. So I think it's an interesting idea. I don't see any like immediate problems with at least trying it. I think the major objections to it are that, one, it's like too successful in a sense that it sort of crowds out demand for vanilla bonds. And then people go, well, why would I hold this, piece of, crap normal treasury security when I want the Bitcoin one, right? And then you could sort of have this reflexivity. It's sort of the same argument with the SBR, which was that the sort of implicit market reflexivity associated with confidence in the dollar system, and that if the U.S. government itself is basically signaling it doesn't have confidence in its own, fiat instruments, why would it expect the market to hold those fiat instruments, right? And I think that is a risk at a certain point, right? So I wouldn't say the government should just YOLO $2 trillion of issuance into the market, right? But I think you could start with, say, 10 billion, right? Test it and see what the market demand is. And then over time, you could add to that. And it would be, I think, there'd be no risk, right, to market sort of reflexivity. And in fact, right, if you play your cards right as a steward of the public, security interest here longer term, acquiring Bitcoin is a good thing for every institution or for every individual. Every economic actor, I think, has a strategic logic to acquire Bitcoin. And so this is just an effective way of acquiring Bitcoin. Doesn't require any special purpose program, right? It's essentially, okay, there's a way of the government financing itself, lower costs while filling up the SBR. So we figured it's worth putting on the table for consideration, and get folks talking about it.
Yeah, it is very interesting, and you had mentioned, I think the tax advantage status is an important point, because my not objection, but my worry about lack of demand was around demand for these bonds, right? And because you can lock in, capped upside, you can give away capped upside to reduce your downside risk in a number of ways, and I would say probably the most popular is through various types of options trading, right? So I'm looking at this saying, if I'm a buyer of government debt, whether I'm a nation state or a corporate or an individual or whatever, right? There's tons of owners of U.S. debt. Basically, everyone that has a 401k owns some U.S. debt for sure. Money markets are U.S. debt, right? It's prolific. Probably one of the deepest and most liquid markets in the world is U.S. sovereign debt, which is treasuries. Why not just buy Bitcoin or DCA Bitcoin over 10 years rather than hold this bond to get this guaranteed Bitcoin, when why not just buy Bitcoin or perform synthetically? But I guess the tax advantage is an interesting point that you cannot do without buying government debt. Typically it's government debt that is tax advantage, right?
Yeah, there's both the tax advantage piece, and there's also just the pool of buyers that are sophisticated enough to do this sort of options hedging strategy is much smaller than the pool of buyers that could just be, this is another thing, right?
Totally.
It's a pretty vanilla bond product.
I don't remember the tickers, but I'm pretty sure there's some ETFs that do this now with Bitcoin specifically, like a capped upside.
Yeah.
But you're right. It's a sophisticated. I can't even describe to you the exact options trade to do that. I just know it exists.
Mm-hmm.
I've seen our clients and counterparties do trades like this. I'm just not an options trader either. And
it's clear that there's a bunch of private Bitcoin treasury companies now going into the market. We've had MicroStrategy, we have 21. Is obviously Metaplanet and Moon, and there's a bunch of other ones now coming out in every country that's trying to do the same play, where there's a bunch of trapped capital sitting in funds that have a particular mandate and they can only buy certain types of products. And Bitcoin's not one of those. And there's a large number of institutions that can only buy U.S. Treasury securities, right? Because they can't buy MicroStrategy corporate debt, or one of these kind of different sort of convertible bond structures. But they can buy, U.S. Treasury debt. It just happens to have this Bitcoin kind of, kicker. So I don't know. I think it's worth at least more research. And, the Treasury Department, for example, spends years studying things like, should we issue a 20-year bond, right? And they'll look at the market microstructure. How many bips of savings is the market not liquid enough? Is this because there's on the runs and off the runs, and so if there's off the runs here, they trade at a premium or a discount, and then what's the dealer inventory? How does that get offloaded into shadow pipeline? So there's all sorts of other technical issues that you would want to study before you just sort of YOLO this out into the market. But it's if you're in this tree where the government is going to establish an SBR and maybe add to it, okay, well, what else can you do that's in furtherance of this same strategic objective that also gives them revenue neutral in the sense of you're going to have to borrow a certain amount of money regardless. Are you going to choose to borrow that net new $10 billion with just regular $10 billion worth of 10-year bonds, or maybe you throw in a little experiment with $10 billion worth of these Bitcoin bonds and see what the market does.
Yeah, I think it's interesting. It's not unreasonable. I think the other question I have is maybe a worry is it, whether it's Bitcoin or anything else that's the sort of hot sauce added to a treasury note, is it, let's say that, they do the offering and there's, it underwhelms. Is that worse? Is that bad for treasury? Is it bad for I know it would be bad if we offered 30-year bonds and they don't all sell, but 30-year normal treasuries, right? But even in a sort of a bespoke, smaller issuance sort of trial, if it doesn't go well, is that bad for it? Would it hurt Bitcoin? Does it hurt the treasury? Does it hurt our debt? Does it make if we had any issuance that doesn't sell out, does it make rates skyrocket on everything else? I don't know. Is that something to be studied?
I mean, it's a possibility, but I mean, the government does all sorts of queries and polls, of the bond market, right? To see, hey, if we put out this, what would your uptake be, right? So I think the government should prudently approach this like it approaches all its issuance, which is they never want a failed auction, right? There's been concerns about that in the past, and how much is being taken down indirects or whatever, right? But I think you could probably get enough balance sheet out there to hey, would this be interested to you? And then yeah, we'll take a look at it. We'll see what the yield is, and we'll take a, we've got balance sheets, so yeah, we'll be there.
I mean, theoretically, to your point, if they can issue at a lower interest rate, and there's a lot of demand, and so they can borrow at a lower interest rate, they should, whether it's putting in Bitcoin or putting in, daffodils, it shouldn't matter, right? That in the end, they want, reliable bond purchasers to fund the operations of the government, right? Like at scale, like that's what they want, right? I mean, I don't know. I mean, the other question I wanted to ask too about, you'd mentioned one of the fears people have is, or that have been, or criticisms that have been raised. Same thing. You buy $1 of Bitcoin in the SBR. Does that signal like fear about the state, the government's confidence in its own currency, the dollar, which of course fiat currency is basically by definition a mix of a long con and like enacted by force, right? Like there is no fundamental value to the US dollar. It's a piece of paper. It's not backed by a commodity, right? It's like the full faith and credit. Does it damage the full faith and credit if they start exploring? I guess, I mean, you've addressed that, I think, and you and I have talked about this, but I think, right, your view is that like, well, yeah, maybe if it's like trillions of dollars and we YOLO into it, but at a small amount, it shouldn't have a marginal, it would have marginal or no effect, is your view.
Yes, that, but also I think it's, you have to live in the real world where you have to assess existing risks to the system from its current trajectory. And I would say like the biggest risk to faith and credit in the dollar, but really the treasury market, is just our fiscal balance sheet and the geopolitical order unraveling. And, so that is much more likely to lead to forced selling or, a vote of no confidence in the bond market, is just the weaponization of the dollar, fragmentation, existing indebted governments not just, not having the capacity to take this up anymore. So just there's a lot of fragilities in the bond market that exist. And I see this as a way of essentially trying to build in a little bit more of a structural reinforcement for the bond market, right? That if the government thinks Bitcoin's a good thing and Bitcoin's going to go up in value as a result of government action, right? It's like the government, is very few assets the government can sort of like, easily sort of graft into a treasury bond product, and then through their own policies, make that, that asset go up in value, right? So if we're in a world where we're trying to go run around to the Bank of Japan and like force them to buy our 30-year bonds and then sort of whisper under the table that we'll help them finance it with swap lines, that to me is a signal that we're in big trouble, right? That like we're effectively having to like go around to all of our friends and kind of like beg them to buy to buy more duration, and maybe even subsidize it right through the back door with swap lines, or ask people nicely to take hundreds of billions of dollars out of the FEMA repo facility and use that to buy on the long end. So if we're talking about those sorts of moves, right, even explicitly like Moran, like I'm sorry, but like we're now in a world where it's clearly the status quo is perceived as not sustainable. So we're going into the sort of the drawer of like extreme options, and it seems like a Bitcoin, backed bond is like less likely to have failure modes or blowback than these other moves that are already put on the table.
I think that's a fair point. And I want to talk about quantum a little bit, but before we do, just one more point on the geopolitics. I've been thinking a lot about the Triffin dilemma, as I think one does over the last, 6 months, really. And just for the audience, that Robert Triffin was an economist in the 60s who did a study, a survey of prior global reserve currencies and what various effects, direct and second order, that having the global reserve had on their economy and trade. And sort of one of the core takeaways from his study is that the issuer of the global reserve tends to end up with a massive trade imbalance because they have to net export their currency at scale in order for it to be the reserve, right? To be the thing that, two unrelated international parties use to exchange goods in a foreign place that isn't even touched your country. There's got to be an abundance of, in our case, dollars all over the world, right? So you end up being an exporter of dollars, which makes you an importer of things those dollars buy, right? Like goods, basically. And this is what we've seen, right? Is trade imbalances, not everywhere, but around, certainly with the biggest trading partners we have, like China. And the president has said that that's unfair, that the imbalances are unfair, but actually it's not only not unfair, it's explicitly how the system is designed. And if you believe in Robert Triffin's theorem, it's also inevitable, right? And so to me, the adding of tariffs on those countries with whom we have trade imbalances is also explicitly detrimental to the status of the dollar's global reserve, because you are effectively raising the cost on those nations that export to you to buy our dollars with their goods, right? We're making it more expensive for them to use the dollar as a global reserve. So that's one of these forces that you mentioned, one of these big forces that's, let alone the general multipolar realignment that is happening, right? We're really not in the 1991 to 2001 golden era of American, exceptionalist empire anymore, and that becomes clearer every day. But do you know, where does Bitcoin fit into that thing? I mean, do you think that, like, I know I'm adding in all the stuff from our conversation here, but, like, settling in gold, I've talked about, people have, some banks, I forget, somebody wrote an interesting note about maybe international trade between countries might be settled in gold. And I'm like, well, how are they going to do that? Gold's terrible for self-sovereign settlement and usage, because, like, it's one thing if, for me to settle with you in gold, we just call up the New York Fed and say, just move a couple bars from, cage 1 to cage 2. But that's not, if you're trying to diversify away from the US, that's not how you would do it. So then, are we talking about warships? Does Bitcoin play a role in countering the decline of the dollar's reserve status, Matt, or promoting it? And does it play a greater role either in enforcing our position in a multipolar world or having others hedge?
The way I try to model this is, there's a lot. I could kind of give the top level view, and then I really want to talk about the quantum stuff, because it also plays in here, because I think that it's the game theory and dynamics around both the technical and the governance, paths for quantum threat change depending on how you model in sovereign adoption and the incentives of sovereign Bitcoin holders as well as sovereign Bitcoin miners. But that being said, I think we're in kind of this phase transition. Right. So, like, the global system, is like a complex system where, in many, most of its modes are stable modes. Right. And they're sort of reinforcing dynamics that kind of keep that system at equilibrium. And for the post-war era, like, we were kind of a reinforced equilibrium with U.S. security guarantors and, kind of the implicit hierarchy of power in the world. Right. The U.S. could sort of keep the system stable as well as, like, exerting its power and then forcing nodes to plug into it to give it sort of that Matthew effect, right, where it has preferential attachment in a network. And so it built and then maintained network dominance in the global financial system, the global telecommunication system, and the global trade system up until a challenger arose, China. And so China is now essentially what we can say multipolar. Sometimes we have different models. I see this as like a network competition, where these existing networks that U.S. has sort of built and gained strategic dominance through is this sort of series of networks at its construction. And then it goes into sort of surveillance and sort of choke point power. And so China's trying to essentially challenge that system by building their own alternatives that, to first order, give them failover redundancy. So if they're ever sanctioned out of those systems, they have the ability to still conduct their strategic activities, trade, finance, et cetera. So they have their own financial rails that they've built, SIPs, et cetera. They've also built the redundancy in terms of their exposure to the treasury market, right? They're more on the short end, and they stopped buying net new, and they've been accumulating gold. So they've been doing these things to build in resilience, failover, not to aggressively change the global system. So it's kind of build, slowly expand, and then if there ever is a crisis, that there's a sort of a second option on the table for other countries to use. And I think we're in this moment of we went from rivalry and competition to, like, enmity and, like, basically measure sort of war, right? We're in, like, a total economic war. We basically have a de facto embargo declared. The system is going through an acute crisis mode here, where the Treasury Secretary is saying we want to change the Bretton Woods institutions. And, we're trying to sort of settle the beefs around Eurasia, conflict zones in order to kind of rewire the global sort of security order. So there's a huge amount of change now. We went from this kind of stable regime where all the assumptions that a lot of folks and investors had, growing up about the way things work and just the mental models that work are now not going to be effective anymore, because the basic foundations are shifting for lots of different reasons, but they just are. And so Bitcoin, in this era of transition, which is inherently chaotic and unpredictable, I think serves a very valuable function as essentially a hedge against uncertainty in the legacy system breaking in some ways. You have a lot of exposure to the bond market, a lot of exposure to the legacy structures. And then all of a sudden you wake up one day and you realize, oh, those weren't as secure or as guaranteed or as likely to endure as I thought they were. And so now you look around, how can I hedge myself, right? I think Bitcoin serves as a useful hedge through that kind of chaotic environment where, in general, when you have sort of hegemons fighting each other, they print lots of money, right? Because it's very expensive to fight and break things. And then you think about, okay, after the fight happens, right? There's like what does Bitcoin mean in like the whoever wins world, right? Because you go through this transition, there's cost imposed, somebody eventually submits, there's a new order that is then sort of condenses out of that chaos. And I think Bitcoin in that post-crisis phase, I think is poised to play a much larger role, but it's hard to predict exactly what role it will play because I think the nonlinearities are very, very large, right? But I think it goes from being like a like meaningful fraction of gold, right, in one scenario, to like a complement at parity with gold as a neutral reserve asset, and to like it has now surpassed gold as a global reserve asset, and it's now taking on other economic functions. And so I think those like the three scenarios I think about, like the end state post this transition. I think in either scenario, Bitcoin is likely a meaningfully higher proportion of total assets, but its strategic implications are very different depending on if it's 25-50% of gold, parity with gold, or larger than gold.
Yep. A great answer, Matt. And thanks for doing that awesome, deep answer with my rambling, long question. So very, very skilled. So let's talk about quantum and the threat, not just to Bitcoin, but to the world. Something I've been getting, I've looked at for years, but I had never I'm going to ask you to explain what the threat is, and then let's chat about how, because the big questions are, when is it a threat and how do we fix it or prevent it or whatever, mitigate it, et cetera. But just for quick background, quantum computing could allow for much faster, orders of magnitude faster and more efficient computation in a variety of ways. But one is that it's a threat to brute forcing cryptography, right? And the idea is like perhaps public-private key cryptography that you could maybe, with enough computing power, you could reverse, discover the private key from merely the public key, right? And public asymmetric cryptography is built on letting the public key be known, right? Let's think of it almost like an email address. That's what people encode their message with, so that that only you with the private key could decrypt it, right? And it's also how Bitcoin addresses work. And so the fear is that, with significantly more computation, some ungodly amount that quantum may one day bring, that you could break Bitcoin's address security, steal Bitcoin from weak addresses, et cetera. And to be clear, not just Bitcoin, not just other cryptos as well, but also other systems. Maybe just you give us a high level on the quantum threat as you see it, Matt.
Yes. I mean, this has been on the FUD dice. This has been, an enduring item for many years now. Because quantum computers have been theorized since the 80s. There were headlines in New York Times in the 90s. It was always 10, 20 years away. So it's not like it came out of nowhere. Like all of a sudden, like AGI is now like, boom, it's a thing, right? Quantum's been sort of on this slow burn here. So why is it a concern? Well, one, right, like technology progresses, right? So you should expect quantum computing technology to progress. The rate of change of that progression is very important. But the risk that, it presents to Bitcoin, as you mentioned, kind of two main vectors of risk. One is it could potentially allow the cryptographic, when you have a post-quantum, when you have a quantum computer that can be cryptographically useful, it means it can run an algorithm called Shor's algorithm, which can sort of factor large numbers. And that factoring process is effectively what secures most of the addresses used in Bitcoin. So SEC P256K is the main kind of signature scheme that we use that uses elliptic curve cryptography. Shor's algorithm essentially is a way of kind of breaking that algorithm. So you can recover private keys from a known public key. So that would be problematic for Bitcoin addresses that have those sort of signature schemes. So most of the early coins, like the P2PTK, would be exposed. Also Schnorr addresses. So
and also, right, any address that's been reused, right? Because when you sign a Bitcoin transaction, you do reveal the public key. Because the real issue there is the actual public key known? Most of those newer formats are hashed public keys or hashed scripts, right? So like reversing a one-way hash function to then get the public key to then crack it and get the private key. My understanding is quantum, the theory doesn't really even suggest that reversing one-way hash functions is something quantum could do. but there, by my count, and this is project11.com has this count, so not my count. 6.2 million Bitcoin fall into those categories, either bare public key addresses like some of the very early coins, or addresses that have reused their addresses, so their public keys are known. That's a lot.
So so it's, if you get cryptographically useful quantum computers that can run the current version of Shor's algorithm, then those addresses would be at risk from essentially being stolen, right? That's kind of the risk. Someone else could now spend your coins or spend those dormant coins. The other risk from quantum computing, maybe longer term, is a little bit more speculative, is on mining, right? So Grover's algorithm is a different algorithm that would be useful for attacking, the current hash function, but the speed up you get is like a square root. It's not as exponential as you get from Shor. So that's much further down the line and not really even useful to kind of bring to the debate at this point, because the real question is then, okay, if such a computer can be built, when would it be built? And so that's where the assessments go from 2040, way out there, to early, maybe early 2030s. And so this is this kind of cone of uncertainty that you're operating within. You kind of have to be a bit of a Bayesian about it. And so, if you're like Reason, I think Jameson Lopp has written about this. Hunter Beast on Twitter has done some analysis of this. And so you look at, okay, if you assume, say, 50% chance, or if one of your models, there's 50% chance that we get to this like Q day by, say, 2030, 2035, somewhere in that range. Well, then you sort of try to back in like all the things the community, broadly speaking, would have to do to be prepared for that scenario. And, implementation of post-quantum cryptography is like a large thing that's been underway in the government and across the commercial sector for many years now. Something called the Commercial National Security Suite 2.0, which has a bunch of these algorithms. NIST released, I think, in 2023, a bunch of post-quantum cryptography schemes like FIPS 204, 205, and 206. So there's been a lot of work done on post-quantum cryptography. Now, for the community, right, I think about this from the perspective of scenarios, right? There is like bolt from the blue, all of a sudden some secret lab in 2 years comes out of nowhere, and they do, some sort of polynomial time, deep Schnorr algorithmic craziness, and they combine that with, say, available, current on the roadmap IBM or whatever, available quantum computers that are like 400 logical qubits or less than 1,000, and they're able to like do some crazy trick out of the blue. So it's like a bolt from the blue. Oh shit! Like we thought this was 10 years away, and all of a sudden it's hitting us in the face. That's one scenario. Another scenario is, the best estimates, from the mathematicians, the nerds, is that you need roughly 2,000 to 3,000 logical qubits to have conduct a meaningful attack on this encryption. And the question is, well, how long is it going to be until we get to, say, systems that are 2,000 to 3,000 qubits? Maybe there's some folks that maybe say you actually need less than that, but that's kind of the baseline. And maybe that's 5 years away if you're talking about like a spooky lab that's like 5 years ahead of what we think the commercial state of the art is. So that'd be like 2030, 2031. I would say is like the most optimistic, like the most like pessimistic in this sense. Different assumptions given the rate of progress would push that back to like 2040. So if you're extremely like risk averse and you're like, there's some spooky breakthrough, some NSA, they're 5-10 years ahead, you're probably talking 2030, 2031. If you're a bit more, maybe in the middle of the curve, you're probably into the middle of the 2030s. If, maybe a bit more pessimistic, you're out to the 2040s. So then yes, exactly. And so you have to think, okay, if it's a 5-year problem, then it's really have to kind of start thinking about your mitigations now and the social layer and the governance layer and all these different processes, because, that sequence matters, right? How much urgency there is, and then what your mitigations are to sort of, they exist on a spectrum, right? And there's been lots of proposals pushed out there, everything from taking advantage of the, there's a third, I forget what it's called. There's like a third path in Taproot that was like already put there so that you could basically plug in these post-quantum schemes if necessary. So you could essentially do like a test net to kind of start to work out the kinks of these BIPs, like BIP 360 that has been proposed, and think through, what are the implementation challenges, right? Kind of like the design, the implementation of different encryption schemes, different ways of sort of loading this in as a soft fork, right? And the problem with post-quantum cryptography right now is that these signature schemes are very large, right? They're like 10, 20, maybe larger in terms of the amount of bytes they use. So there's a lot of like trade-offs then in terms of transaction throughput, that maybe you have to do like another SegWit style discount. So you get to all these then like second and third order questions about, okay, debates and then, collateral impacts. But that's still just like a, doing the test net, doing the sort of analysis and technical implementation and, red teaming on a potential soft fork. Then then you roll it out as a BIP, and then it's a, soft fork activation kind of thing. And then you get to these like much more contentious scenarios, right? Which is like a bull from the blue, or like the timeline is accelerated faster than you think. And you need to have essentially that break glass option, right? Because if someone does come out of the blue, say it's a covert Chinese lab that's using, this to kind of plausibly poke at U.S., strategic Bitcoin reserve or something. You need to have that kind of option on the table, right? Or you could make an argument you need the option on the table to do something to mitigate that attack. You're just going to let those coins be stolen. That's an option.
So an insurance plan or a backup.
Yeah. And then this is like the Jameson Lopp idea, which is like, all right, if you're in this phase where we do some sort of soft fork, right, people can essentially migrate to the new addresses that are quantum resistant. That's going to take a while, right? Like if you just look at the number of addresses that have to move, right? If they just used every block, it would take like a year, right? Just to physically do the transactions, to have those be confirmed, to get old addresses into the new address format. And so that just like starts to stack up, right, in terms of how this can actually be executed. And so there's like, discussions already now that's put on the table, like Jameson Lopp, of like a burn flag, right? There's like a timer that like at this block height, say in 2 years, any addresses that haven't migrated to the new quantum resistant format are going to be considered unspendable by this version of core, for example. And that would be a hard fork, essentially. It would render those old coins unspendable. It would be a permanent reduction in the supply of Bitcoin. There's other ways of maybe mitigating that, like folks could use without doing a transaction, could sort of use open timestamps to sort of prove that they control a certain UTXO without actually doing a transaction. But it's like, who's going to be paying attention? Who's going to do that? Is a whole thing. And then there's all these, things. Oh, actually, you take all those vulnerable addresses and you lock them into a multisig, and you give, distribute those to, the high table, right?
Yeah.
So to speak, right?
And Foundation 2.0, basically.
Yeah, exactly, right. And I think people get little twitches, right, when they hear that, right?
Yeah.
But these are the, you have to assess each of
one of the other
yeah.
ones, I forget, you and I in a group were talking about this in Bedford, England a few weeks ago. And one of the other things that people have suggested too is like you basically reload them into the emission schedule and let them become, so the 2140 decay, basically like they become mineable coins again, right? And so you extend the security budget with them or whatever. I sort of view those two as similar. I know they're very different, but you can reallocate the coins either back to the protocol and thus through the mining industry ultimately out to the supply. You can put them in some kind of, like you said, a high table multisig or something like that. You can do nothing and let the attackers, I won't name just because they're not here to speak on their behalf, but one of our friends was saying, just do nothing. The attackers steal it, then they ultimately spend it and it goes back in the economy one day. Or you recover them and burn them, right? Or you burn them basically, which is, so that to me, this is an interesting part of the question, but it's not like the biggest question. The biggest question is, what is the new address format? What is the new signature scheme? Because my understanding, and again, at this level, a relative layman when it comes to this deep level of technology and Bitcoin technology, but the current signature schema requires you bear the public key anyway, no matter which address format you're in when you sign and send a transaction. So even a new, right, you actually need a whole new signing mechanism, not just a new address format, because even if, once it's published, it's hashed, if it's in hashed key, your public key might not be exposed. Like the new receiving address's public key doesn't have to be exposed on the blockchain when you send somebody coins or send yourself coins. But in the mempool, in a post Q day quantum world, even just moving a coin would expose the public key. And if there's a point where we get to quantum where it's like it can crack it in 5 minutes or less, right? So like you see what I'm saying? That to
yeah,
me
this
is
is
like
really
the big scary thing to solve first, and like what to do with Satoshi's old coins or is important, but it's like a second question.
well. I think to get to like I forget the term. It's like I think Lob has a term for it, but like there's the long range versus short range attacks. Like long range attacks are like you've got one, like you've just got to that threshold, say 2 to 3,000 sort of logical qubits. It's sitting in some PRC or NSA lab somewhere, and they decide, right, for whatever reason, that they're going to use it to go after one of these legacy addresses. That's sort of that would be the first manifestation of this attack on Bitcoin. But then you could sort of fast forward to when you have systems that are 10,000, 50,000, 100,000 logical qubits, where the amount of time it takes to do this attack gets shortened to where it's like it's like it can be done in sort of real time, right? And it can attack transactions in the mempool, right? I think that's a bit less important to worry about right now. I think we are really far away from that. Like this is not like a Moore's Law thing where that's going to be like 5 years after. Like that would be like 20 years after. I don't know. Like that's requires more analysis, but I think that's less of the urgent concern, because I think the risk that I see is like there's different scenarios here where it's like a silent sweep, right, by a nation state, and it's ambiguous, right? It's not clear exactly was this a quantum attack, right?
I was going to say, it doesn't necessarily leave a footprint. It can look like
no, it just is an old address that all of a sudden moved to a new address,
right?
And you're like, ooh, was that quantum? Right? It's not going to be obvious, like, oh, this is a quantum attack. It just one of these addresses just gets moved, right?
There've been some like that as well, where it's like I forget, Reardon and some others that follow Mononaut, and the guys that follow the mempool really closely have pointed out some that look like they might be low entropy addresses that have been hacked, right? And was it low entropy or was it quantum? Nobody knows. I don't think it's quantum yet, but to your point, you wouldn't know. You don't need to know.
Yeah. So I'm really interested in playing out I'm not a developer, so I can't speak to like the technical trade-offs associated with, wallet implementation and, these different BIPs. But I think it needs to be actively discussed. It needs to be, get all the big brains to sort of dig in. And
this is what I want to get into, because if the government or any government, but let's talk about ours, and since you're the Bitcoin Policy Institute, headquartered in Washington, D.C., now has strategic interest in Bitcoin, let alone, we know they own some. They're working on figuring out how much they think they actually own, but maybe they start buying it. It's very important for the government and the country, let alone all of us holders, many of whom, like you said, are Americans, right? Like it's a national issue, right? And so, like, how is the government gonna think about? Obviously, they got to think about quantum across, nuclear launch codes and the stock market and whatever. But they're going to probably have to think about it for Bitcoin also, and they're quite good at these types of exercises and figuring it out. Like, how does the government go about figuring out what to do or how to help it get fixed and whatever?
Yeah, I mean, I did these exercises. Like, I was involved in a very classified big exercise and a whole bunch of meetings on, looking at our continuity of government programs. So the programs that ensure that we have enduring constitutional form of government, so all the bunkers and all that stuff,
bunkers, flying the president around on Air Force One perpetually.
Yeah, right? that whole thing, which we spent a lot of money on over many decades. And it was, okay, given changes in technology, given changes in adversary capabilities, what about the system, programs, et cetera, needs to change? And so I was involved in these sorts of meetings and analysis and tabletop exercises, et cetera. And so you can imagine, one thing that you could want to try to simulate in advance of this is having tabletop exercise discussions, right? Trying to simulate how people in different positions, say the NSA, Cyber Command, National Security Council, sort of representatives, folks from the industry, developers, other nations would view different scenarios, right? There's like the bullet from the blue scenario. There's like the just gets across the line scenario, and it puts certain things at risk. And then it makes a difference if it can be attributed to an adversary, or if it's some private group somewhere, or some sort of middle power that happens to have caught up in this tech. And so, like, attribution matters, intent matters, scale matters, and like the repeatability of the attack matters, right? And I think a critical thing about the game theory of the development roadmap for post-quantum integration is the game theory piece, because I think Lop alludes to this, is like having that sort of option on the table itself disincentivizes the attack, right? Because if you know in advance that there's a decent chance the community in extremis is just going to burn the coins that you just decided to like use your quantum computer to attack. Well, one, you just expose the fact that you've got like this quantum computer, which you could probably use for other more covert things, right? That would be higher value to your strategic interests than like stealing, a few $1 billion of the Bitcoin, right? And so you want to like, it's about raising the cost to the attacker and changing their incentives in advance, right? And so that's part of the game theory of the development roadmap, especially knowing that the main attackers in this scenario are likely going to be nation state associate entities, right? Either the governments themselves, like the state, the PLA Strategic Support Force, the NSA, GCHQ, is the Israeli technical community. There's probably a few countries that have like the, on the cutting edge. Maybe like the big labs at Microsoft, IBM, and Quantum. Although to be honest, they're not allowed to do anything that's like going to touch the classified stuff. And if they do, it just gets sucked away. So all that stuff is just nonsense. Like all the Marjorana 1 stuff from Microsoft and Google's stuff. It's all marketing nonsense. And it was funny how like Jensen Huang, like just like on an offhand comment, like negged the quantum computing industry, and like all their stocks, which are all these SPAC, vaporware, just went down like 60%. It was kind of funny. And then they all went to like the NVIDIA conference, and he had to kind of like make up for it by like, shilling their companies. But anyways, that's a bit of a side quest. Like I think, I try to think about these converging trends of like, if sovereign Bitcoin adoption does continue and it becomes a meaningful reserve asset for countries, then they're going to start to assess as a government these different threat vectors, right? So like I can imagine, the National Security Council issuing a task or to somebody on the NSC to like write me the report assessing the quantum threat and our mitigation options. That's going to be a classified report. Nobody in Bitcoin is going to be aware that report exists, right? But I think we would want to know what that report says, right? So there's going to be this inherent, it's sort of an analogy that like the AI issue, right? Which is AI and these like frontier models are coming out of these private labs, non-government, and now they're becoming strategic things, right? Like those model weights are now considered like strategic, pieces of information, and control over, access to inference and KYC of the cloud and all these different, impositions of government prerogatives on, free and open internet and technology is a major point of contention. And so I think the more we do now to kind of anticipate that possibility and to put in place mechanisms for as much of this being discussed in the open, and with an understanding that like, this is an open source software project, right? And it's like the government does government stuff and will do their classified, spooky things. But ultimately, like they can't control the network, right? They can't control the activation of these things. And so that we're in this sort of fascinating paradigm now where, if you do get to this moment where we approach something like 1,000 logical qubits, which I think would be kind of like the marker of where concern would be raised, right? Where like I can imagine a tasker like this being issued. Maybe it's at 500 logical qubits, but I think once you get to between 500 and 1,000, like in either the classified or the public domain, this conversation will become much more real. I don't think we're there yet. We're not there yet. At least a few years away, I think, from that at least. But it's important for the Bitcoin community, the Bitcoin policy focused community, to start putting this on the board as a thing to be analyzed. Right, because it's going to be a long series of discussions and contentions and negotiations and technical development and all sorts of bike shedding to get to anything that's like something like consensus. And so you have to start now, and then see where the conversation goes.
Matt, it's a great conversation. Thank you for coming on Galaxy Brains. And I guess we'll re-roll a little bit of this conversation in Las Vegas next month. You and I and some others will be discussing national sovereignty and strategic Bitcoin reserve stuff there. So we'll see all of you there in the audience. If you're there, come see us. And Matt, thank you so much. What a great conversation. Matt Pines, Executive Director of the Bitcoin Policy Institute.
Yeah, thanks for having me. Go get a ticket to the Bitcoin Policy Summit, btcpolicy.org. Always be shilling.
There
June
you
25th.
go. I'll be there too, so come see us there in DC. Thanks a lot, Matt. That's it for this week's episode of Galaxy Brains. Thank you to our guest, Matt Pines, Executive Director at the Bitcoin Policy Institute, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend. We will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next